All right, today we're jumping into a really provocative take on what's happening in the real estate world. It comes from the founders of Side, and their whole argument is kind of a contrarian one. They basically say that as all these giant brokerages get bigger and bigger, the opportunities for smart, independent agents, they actually get better.
So here's how we're going to break this down. First, we'll look at this huge wave of mega mergers that's happening. Then we'll get into the counterintuitive reason this actually creates a massive opening. After that, we're going to deconstruct what they call the old strip mall brokerage model, look at a really controversial tactic, and then, finally, explore this new vision for agents as CEOs, building something that's actually meant to last.
Okay, so let's set the stage. Right now, the big story in real estate, the one you hear everywhere, is that the big fish are just swallowing everybody else up. You've got these massive corporate brokerages that are constantly getting bigger through mergers and acquisitions. But here's the thing. According to Side co-founder Gal, this is not some new, scary phenomenon. This exact kind of aggressive corporate consolidation, it's happened before. And, what came after that last wave? Well, that's the really interesting part.
This timeline shows this fascinating pattern. If you look back about 20 years ago, you had a very similar buying spree from the big corporations. And what happened right after that? The single biggest boom of local, boutique real estate companies the industry had ever seen. The whole argument here is that we're standing at the very beginning of that exact same cycle all over again.
So, how on earth does all this consolidation lead to a huge opportunity? Well, the core idea is that this isn't a threat to independent agents at all. It's actually the opposite. It's creating the absolute perfect conditions for a new, and frankly better, model to rise up and just thrive.
And this right here is the central belief. As these giants focus on getting bigger and bigger on scale, they leave this massive gap in the market for smaller, more agile firms that are actually, connected to their local communities.
This really gets at the fundamental clash in philosophy. See, corporations, they're built for uniformity and scale. But as Gal points out, community is the most enduring structure in nature, and real estate, at its absolute heart, is a community-based business. That gives the little guys, the boutiques, a powerful, almost unfair advantage. Now, let's really dig into the critique of the mega-brokerage model itself. Why are these giants maybe a little more vulnerable than they look? The argument is that their entire business model, it's built on a totally flawed idea. This comparison from co-founder Hilary Saunders, it just nails the central problem. She calls it a strip mall model. The goal is just to rent out as many little spaces as you possibly can, and you don't really care about the quality of the shops in them. It's a business built on pure quantity, not quality. So you basically have two completely opposing philosophies here. The headcount model would much rather have 1,000 agents who each do just one deal than 10 agents who each do 10 deals. And why is that? Well, because it's way easier to just collect monthly fees from a ton of people. It's not really the business of real estate, it's the business of running a membership club. And here is the real-world result of that model. A mind-blowing 67% of all real estate deals in the entire country are handled by part-time agents. The folks at Side argue this is a huge disservice to consumers who really deserve to be working with dedicated, full-time professionals. Okay, let's zoom in on a specific tactic that some of these large firms really champion, the so-called private or exclusive listing. From Side's point of view, this is a practice that raises some really serious questions about whose interests are actually being served.
Hilary Saunders does not mince words here. She flat out calls private listings a marketing ploy. The argument is that they do way more to build the brokerage's brand than they do for the seller. Look, for something like 98% of sellers, the best path is always going to be maximum exposure to get the highest possible price. Period.
And the risks for brokers who push this stuff, they're pretty significant. First off, you're looking at a potential breach of fiduciary duty. That's the legal obligation to act in your client's best interest by not getting them the best price. And second, there's more and more scrutiny from a fair housing angle, with new laws already popping up in states like Washington to go after this exact practice. So you take all of this, the historical cycle, the cracks in the old model, and it all leads to what they call a new synthesis. It's a fundamental shift in how the very best agents are starting to see themselves and their entire careers. And this leads to this huge change in mindset. The top-performing, most entrepreneurial agents, they don't see themselves as just agents anymore. They see themselves as CEOs of their own businesses, and they're starting to act like it. This question just gets right to the heart of it all, doesn't it? If you're a top producer, the whole value proposition of a traditional brokerage just starts to fall apart. What are you really getting for that massive chunk of your hard-earned commission? A logo? A stamp? And this brings us to the new model. The entire power dynamic is flipping on its head. Top agents are now treating brokerages like vendors, like service providers they hire to do specific tasks, not bosses they work for. In this world, the agent is the client.
So what's the advice for team leaders who want to grow in this new world? Well, Hilary Saunders is characteristically blunt. Get your ego out of the way. The leaders who are absolutely crushing it are the ones focused on building a successful company, not just on being the star of their own personal show.
And finally, let's talk about the philosophy you need to not just survive, but to build a business that is actually going to last in this new landscape. This isn't about quick wins. It's about creating something that will endure.
This is such a powerful metaphor for this whole philosophy. So many people try to take shortcuts, right? They build their business out of mud and hay, and sure, it might look okay for a minute, but the first strong wind, the first market downturn, and the whole thing just falls apart. The alternative? You build a Roman castle.
So how do you build that castle? Well, it really boils down to these core principles. You have to do the heavy lifting and avoid the easy shortcuts. You have to be deeply, truly a part of your community. And above all else, you have to think long-term.
This right here is really the ultimate takeaway. It's a call to action, to build with intention, to focus on strength and on quality, and to create a business that has lasting value for you, for your team, and for your whole community.
And that leaves us with one final question to think about. In an industry that seems to be obsessed with massive scale, could it be that the most powerful move isn't to get bigger, but to get stronger?